Hey traders, Nick here recapping the day. The scoreboard, that's what we start with all the time. And the scoreboard is green across the board as far as indices are concerned, at least the ones I watch. And more specifically, the Dow was up 0.23%, the SPX up 0.3%, and the NASDAQ 0.37. Interesting, small caps up 0.53%. I'll say interesting. I'll let you know why in a second. And as far as the stocks were mixed, we had some real good performances from the momentum stocks and some not so real good performances from, say, Apple, who closed red, and not in a good way. Everything closed in a good way, meaning they revisited the high of the day, or at least tried to towards the end, and towards the close, the last 4 or 5 candles within the day, the last 4 or 5 minutes, were really bullish out of the blue. So the bull air is still here. The bulls are still in control, and I have a few things to say about that. Today, first of all, other than the scoreboard, I was hoping for a few more fundamental clues to unclutter the Friday price action. Remember, I mentioned that in length, but I got more of the same today than Friday. To make matters worse, we had some sort of a quote issue, not system-wide, but there's several platforms I had reports of misquotes, some quotes were missing. So that played around with pricing, I'm sure of it. Regardless, we got strange price action, meaning the markets were flat and the VIX were already down 3%. And then markets gained another 0.1%, 0.1%, not 1%, and the VIX was down 4 or 5%. So that doesn't compute. Usually the VIX is down maybe 1% on the plus 0.4% of the market, but I can't argue with the actual price action. Also there were some strange movements in the price action while the tick was, several things I watch were moving down, and markets should move down with them a little bit, and then when they turn around to move up, and the markets should move up, the markets were not moving down with these variables, and then they were moving up with them when they bounced. So it was like artificially being propped, or one is being brought down artificially, and not really sure what was in play there. Alibaba up 4% on top of the zillion percent that has been up in the last last week. I know I saw $99 on there. So if somebody jumped on board with 99, boy, they're up $20 in just days. So let's give it's more than 20%. Let's round it to 20% eyeball. It's at $119 and change right now. So that's a beast. Tomorrow's an event for it. Today the event started, which is the singles day that they have, and it's a really big day. But we don't know how it reacts after the fact. This is the first time after it became public, so it's really interesting to see. We are long it, at least a lot of us are long it, in and out, and I know that a lot of you are still long it, and I'm happy about that. So I got the same of the action as like confusing from Friday, so I don't have any more clues to see what has happened. The only clear thing is that it's still a bullish air and the bulls are in control. So this market is reminding me of the 2013 bull, except, or I should say minus, the fundamentals that drove the 2013 bull, which was the main one was QE infinity. That was what was driving the 2013 bull. That's not there anymore, but we're still acting like it. So I don't know if it has the same wind as without having the QE. Maybe the anticipation of EQE, which is the European QE, that is still driving the 2014 bull like the 2013. I'm not ready to jump on board that bandwagon yet. So until then, I remain cautious with my thesis. So most impressive was, I mentioned earlier about the small caps. The small caps midday looked like they were going to break down. They started to form an intraday head and shoulders, which is bearish, and then they bounced. They bounced hard, and that was within the last hour or 2 hours. In the last 2 hours, they bounced hard, and not only that, they were underperforming, they were lagging, they were red and flat and red, and then they closed leading. So that's encouraging for the bulls. That was pretty impressive. Not sure what that was all about. One knock on today's movements are volumes, and I'll show you. This is actually the intraday price action if you're interested. This is the S&P. We opened, they tried to sell it, they ran it, they tried to sell it, and then right here, within an hour of the open, right there, where my just we ran up and then changed levels, and then we ping pong choppy action right there. This was the high of the day, but it doesn't really matter because we matched it right here, so doesn't matter. We closed towards the high of the day. That's pretty bullish. This is the small caps. Again, same action. They ran up and then they sold it. You see here how it had, if it had gotten to here, then I would have expected much lower prices intraday, technically speaking. Instead, they decided, you know what, we're going to break out. Right here we had a little zip, and then they sold back down, bounced off of this, and then zip all the way into the close. Pretty bullish for the small caps. Apple, the opposite, they bounced off of this level. I call it the Apple bobber. You know, it's just something I made up for fun. It's like it's got an invisible line that boing, boing, bobs right over until here, and boom, came down to the day's low. So it did not close well. Google, on the other hand, closed really well. Actually, it didn't close really well. It had a really good day, 1.1% in the green. What worries me about Google, though, that a lot of the action today was concentrated in the momentum stocks. Alibaba, Amazon, Priceline, Baidu. Baidu was up almost 5%. LinkedIn. So all these momentum stocks are up big, and Google was up more than the market, so I would say up big. So the bad thing about it is that Google is being treated today, at least maybe, like a momentum stock. So if they decide to sell the momentum stocks, they're going to treat it like a momentum stocks, and they're going to give it all back. Which brings me that I still am hearing a lot of chatter that's negative Google. I'm not negative Google, but a lot of people are, and that's the only thing that's keeping me from going into Google. And speaking of Google, I want to show you. Let's go into the Google. And technically, people are wanting to see a break above this ish line, 560. That's Google L, 560 to 570. They want to see a break above that. Otherwise, they see a revisit of the lows and even lower than the lows. So this area is still in danger from other people's opinions. In my opinion, Google is cheap enough where it is and can be taken long. I want to go in with credit put spreads, but I'm not jumping in for those reasons I just mentioned. I think we will get better price action. And also the open interest this week gives me confidence to short it above certain levels that I shared with you in the morning. However, I'm not doing that because I'm already short a lot of stuff and I don't need to short Google already. So those were my thoughts on Google. And as far as volume, that's the other thing that I didn't like today. The volume today was pretty meek. This is the SPY, and the volume is about half of the 10-day moving average as far as volume. The blue line is the moving average, and we're a lot lower than that. So that's the only knock on it. What does that mean? May not mean anything, but in theory, it could mean that conviction is not there. Same for the Qs, but that's a bullish candle. So if we go look at the Qs, volume is also lower than the moving average, and also a decent candle, but it's still, we're, you know, these are highs, like whatever, 14-year highs. Today we poked through on the Nasdaq, I think I heard somebody say. So it's long-time highs, not the all-time highs, long-time highs. All-time highs are still a lot higher than that. But that was the dot-com bubble, so I don't use it. So this is these are the small caps. Again, so why is this candle important for me? If I can eyeball, look at the failures here. We are close to these bounce failures. That doesn't mean that we're going to fail. I'm just going to put a little line here, just to remind me visually as another level. And I don't know if that's exactly horizontal. Looks like it. So we're bouncing. I mean, these candles are really impressive in a row. Volume not so impressive, but you cannot argue with it. This is bullish, bullish, bullish. The market is bullish air. The bulls are in control. Period. A conviction level for me is very weak on the bull thesis here, so I'm still cautious. All right, so flexible grid. I think I spoke. Oil in a toilet. This is oil all day. TLT looks just like oil, which are the bonds. So the bonds are clobbered, down almost 1%. Oil is down almost 2%, 1.75%. And conversely, the 10-year rates are up about 2%. Now, the 10-year rates are not as up as Friday's pre-open high, which can be concerning to the bulls, but they're up seriously for something that usually doesn't like to move that much. So, but now we're up against some levels from which we bounced before. So, are they becoming now resistance, or are they going to bust right through and go to a high end? An increasing 10-year rates is bullish markets as of late. So markets are rallying with the rates and selling off with the if the bonds rally, but the bonds have been clobbered. I did say if you want to short the market, you can go long the bond, but today you would have lost money. But it's not a dead story. A lot of people are still bullish bonds, and people say rates are going to go up too. So you don't know who to believe. So if this is like beyond your pay grade, don't be embarrassed, because everybody's confused. Even all the experts got it wrong this year, and they all admit to such, that they got it wrong. CMG was muted today. That's Chipotle. I'm going to cover a few names really quickly, actually, but first let me see if I covered all of the notes. The NASDAQ did not this is the NASDAQ NQ. This was the day high, 41.78. It did not recover it. However, it still closed green, 0.45%. So all the momentum in the greens, with all the momentum in the NASDAQ greens, I would expect that the NASDAQ would be better today. However, it had a few drags. Apple's relative underperformance wasn't down a lot, but just it was like a weight. Comcast was down a lot, 4% on such a big box. This box is bigger than Priceline, which was up 2%. So that helped. Charter Communications was also down 6%. Not as big a box as Comcast, but it's still a big impact. Intel and Cisco, 1% almost, minus 0.7%. Those were big drags on the market. Okay. Google participated on the upside. Big boxes in Google. And Baidu, 5% up on a decent sized box. Okay, so these are good. BIB, so healthcare also participated. Whole Foods and Green Mountain. So we have some spotty areas that propped it up, but we also have some big drags. So kind of they cancel each other out, and that's why you don't see the NASDAQ true health, because of these big moves based on earnings and other headlines. All right, so let's look at. Let me see if we can take a look at some trends. We're still in the trends. This is obviously a weekly candle, only one day in a week, but we're still right there. I just want to refresh my look at things. Look at the Qs. You never know. Different slices might give you different ideas. Okay, so let me draw a line here, just for giggles. Alright, every time I draw a line, that's just another line for them to cross over, right? So we are over this green line, which had been a top of sorts, except for this pokiness, right? So we did poke through it before. It's not a first. We are above it now. Let me go out to 2 years and see how solid this line. Oh, this line goes out beyond 2 years, so I'm not going to extend it right now. But IWM, which are the small caps. Range, I'm just looking at the ranges. Everything this week, based on this week's open interest data, everything is in resistance territory. So anything beyond here is impressive. All right, so is this period right here? Remember, we had an incredible run up. We have an incredible run up. So we have 3 candles that are kind of like losing the slope. Or is it? It's definitely not this. We had only 2, and then boom, boom, boom. So where are we here? Are we in just breathing so we can go higher? Like breathing so we can go? I don't know. So I'll wait and see. All right, and no major moves until then. And patience will pay. I know some of you are anxious to get into trades, but why get into trades that are going to be headaches? All right, so this is the day in a nutshell. I did have a request or two. Let me see if I can pull them up real quick. Somebody wanted to see what I thought of Starbucks. I love their coffee. Very indecisive candle. Bullish though. 3 green candles in a row, and the whole slope is good after that one bounce after the earnings. So overall, healthy uptrend. I did play a lotto on the earnings that left me with an $80 call for November. So I'm inherently bullish on it just from my lotto call. But that was a lotto play. I didn't invest a lot of money, but I will gain a lot if it happens. That's why I play those things. So I like Starbucks, and I think if it can cross that 78.50, emphatically, it has a lot of room to go because it has a good reputation with regards to as a good corporation that does good things. Their CEO is well spoken. Their management is never in doubt. So if anything, and they work with a base of things that they're not going to lose clients because everybody's addicted to coffee. If you're drinking coffee now, you might drink a little bit less, maybe, but you're not going to walk away. And people usually drink it just for the experience. They love stopping by in the morning and talking to the people. So it's more of an experience. I know some people that are they shouldn't be affording Starbucks coffee, yet they do. So you can't argue with that. So I'm looking at 78.50 as another point to see what it's going to do. So today was indecisive. Market said, I don't know what I'm going to do with Starbucks. They tried to run it up, they tried to sell it, and they decided, we better close it exactly where it opened or thereabouts. So no clues as to what happened with Starbucks today. Overall, I think it's a good company. I am along it, but just by a lotto play. We are close to 2-year highs. They're probably all-time highs as well. So, buyer beware. Obviously, you're buying at all-time highs, but that doesn't stop the markets. All right, so if you're short a lot of things and you want to be long something and you're desperate to go long Starbucks, call spreads, debit call spreads, why not? Or buy it and forget it. But debit call spread can reduce your risk. All right, so this is the day. Let me look at Apple, actually. We have not looked at Apple in a while. That scares me. Not because it's a loser company or anything like that, but that's just a long extended neck, and it's just they need a flying car. That's happened before, and they just run right back up, but they need a flying car. I don't want this. I don't want to be caught in something like this. It has lost 4% in one day, and I think that might be one of them. I think 2 days. So pay attention. It can happen. So anyway, caution there, and Google already covered Priceline. I want to catch that falling knife, and now it's a little bit safer to do so, but we're not out of the woods. And I looked at premiums. If I want to do anything with Priceline, I'll go to January, and premiums, you can pay 40 cents somewhere down here. So credit put spread for Priceline down here would pay you 40 cents ish. That's a good place to go bullish on Priceline. This gives you time. Not here until January, and so price movements, you'll be able to react to negative price movements, but I'm still not rushing into it. This bad boy runs fast and is tied to Europe. So this is the nutshell in the day. Today is going to be short-ish. I thought so, but we are at 17 minutes. If you have any questions or any requests, message me. I'll cover your stuff in here. Nick, signing off.